Thank you. Good day, everyone, and a warm welcome to Ester Industries Q3 and 9-month FY20 analyst and earnings conference call, investor conference call. We have with us today Mr. Arvind Singhania, Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect was stated in the Concall invite sent to you earlier. We have trusted you have had a chance to go through the documents on financial performance. I would now like to invite Mr. Singhania to make his opening remarks. Over to you.
Thanks, Kevin, and thank you everyone for joining us on our earnings call. I have Pradeep Rustagi with me, our CFO as well. I will begin the discussion by highlighting the key operational developments, post which Pradeep will run you through the financial highlights. To begin with, I would just like to say that we have maintained our first half momentum into the current quarter, which witnessed profitability growth of 130% over previous year. The growth was largely driven by the positive performance on the film and specialty polymer business. Engineering plastic business, though, continues to remain soft in line with the overall economic slowdown and sluggishness in the auto sector, the biggest end user segment for the business. Besides the improved performance of film and specialty polymer business, other reasons which drove the profitability was reduced interest cost, subsequent to reduction in interest-bearing debt. Moving on to business-wise performance. Starting with specialty polymer business. Performance during the year till date has been extremely strong. In addition to the accelerating revenues, profitability as well has seen a sharp bump up in recent quarters. FY20 could very well be turnaround year for the business. After few initial soft years, wherein the business had few ups and downs, we believe that we have now reached the stage and maturity wherein it can deliver on a consistent basis. Order visibility in general remains high. We have a strong patent-protected portfolio in this business. While the demand for MBO03 has remained high during the year, we have other products as well in our portfolio which are seeing good demand and inquiries. Let me talk about a few of them. The innovative polybutylene terephthalate PBT, deep diable master batch MB07 and cationic diable master batch MB06. Polybutylene terephthalate, as I mentioned in my previous call, finds applications across industries and products, automotive to consumer products, and from electronics to fibers. We have entered into an agreement with global chemical leader in April of last year for a period of 2 years to certain quantum annually. While those volumes may be relatively low, there is a possibility for a significant upside. The agreement is renewable by mutual consent after 2 years. For MB03, though, we maintain our guidance of supplying about 1,200 metric tons during the year, compared with the average of 300 to 400 metric tons in the previous years. Also, as many of you may be aware, the board recently approved investment of rupees 110 crores for the business to help meet the growing needs of the existing and new customers for existing as well as new products. The investment of rupees 110 crores spanning over approximately 2 years will help generate incremental specialty polymer revenues of around 180 to 190 crores. As I mentioned in the past, specialty polymer business is a very high margin business. It enjoys these high margins because its product portfolio represents innovation. The product portfolio that we have is the result of an immense amount of hard work and trials that have spanned over the last 7 years. We are delighted with the results this business is now showing and believe that we will see more traction in this SBU going forward. The specialty polymer business is the key catalyst which will help us transform into an innovation-driven company. Moving on to film business, volumes continue to remain high during Q3, in line with the recent period. The realizations as well have remained more or less steady. We haven't seen any meaningful impact of the incremental capacity which came on stream during the year. The underlying demand continues to remain steady, in turn helping market absorb the additional supply. Further, we have also been working internally towards improving our product mix by increasing the share of value-added products. As mentioned in our previous call, we are targeting to increase the share of high-margin products to 30% over next 1 to 2 years from present levels of approximately 20%. We are about to commission a new offline quota by March 2020, which will help us achieve this target. We are also evaluating the existing and emerging demand-supply scenario. Any decision we take in terms of increasing the capacities will be taken after a thorough evaluation and analysis. Lastly, as far as engineering plastics business is concerned, the performance of this segment continued to be weak, impacted by the extreme slowdown in the auto segment. The continuous downside in the auto sector, however, seems to have been arrested. Signs of revival have been seen in the electrical and electronic segments, the other large end-use segment, with promise of the next quarter performance seeing some improvement. We continue to focus on cost rationalization measures, which in conjunction with the improving business performance has been helping in expanding the profitability. To conclude, I would like to reiterate our positive stance on the business. We expect film business to deliver steady performance in coming quarters, whereas the improvement in specialty polymer business should continue in FY21, in turn pulling up the overall profitability of the business. Engineering plastic business should revive and sync with the pickup in overall economy. Further, our cost rationalization measures as well should improve efficiencies and margins of that business. With that, I hand over the floor to Pradeep, who will run you through the financial performance. Thank you.
Good afternoon, everyone, and thank you for taking the time out for our call. I trust that all of you have received the investor document circulated by us earlier. Let me quickly summarize the key financial highlights for the quarter and half year, following which we can begin the Q&A session. Starting with the top line, revenues from operations for the quarter stood at rupees 246 crores, while on a 9-month basis, the same stood at rupees 785 crores. Bulk of the revenue was driven by the film and specialty polymer business. Engineering plastic business continues to remain soft, largely owing to overall economic slowdown and sluggishness in auto demand. EBITDA for the quarter stood at rupees 45 crore for the quarter, as against 29 crore reported during Q3 FY19, higher by 56%. While on a 9-month basis, the same stood at 145 crore, as against 83 crores reported during 9 months FY19, higher by 75%. Higher profitability was owing to improved margins in film SBU as well as increase in sales of especially polymer SBU, especially high margin products like MB03 and innovative PBT. Finance cost for the quarter stood at rupees 5.3 crores as against interest outflow of rupees 8.9 crore during Q3 FY19. While on a 9-month basis, the same stood at rupees 19.6 crores compared with 26.4 crores reported during 9 months FY19. As on December, standing interest-bearing term debt stood at rupees 72 crores, while interest-bearing working capital liabilities stood at rupees 99 crores. Interest-bearing debt as multiple of annualized EBITDA stood at a healthy level of 0.89x as of 31st December 19 in comparison to 2.49x as at 31st December 18 and 0.8x as at 30th September 19. Depreciation for the quarter stood at 9 crores as against 8.4 crore for Q3 FY19, while on a 9-month basis, the same stood at rupees 26.4 crores as against 24.2 crores reported during 9 months FY19. Profit after tax for the quarter grew by 132% to rupees 19 crores as against profit of rupees 8 crores generated during Q3 FY19. While on a 9-month basis, profitability grew by 172% to rupees 62.6 crores. Higher profitability was largely on the back of film and specialty polymer business. To conclude, we believe we are well on track to create significant value for our shareholders in the coming years. Bulk of the business is in good shape. Volumes continues to remain steady in film business. Realizations as well have remained steady despite additional supply entering the market. Specialty polymer business as well is expected to deliver steady performance, in turn helping drive the profitability. Lastly, while engineering plastic business goes through a challenging time at present, we believe that it is temporary in nature and expect the business to revive going forward. That concludes my opening remarks. We would be happy to answer your question now.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations for fairly steady and decent performance, at least quarter on quarter. Sir, there are few gaps in my understanding after this new round of capex has been announced. So, could you give the breakup of all the capex that you will be doing over the next 3 years? and also the gross block breakup between the the 4 divisions of specialty polymer, value-added films, normal films, and the engineering plastic part. And also for these 4 divisions, can you also give the capacity utilizations as of today, and what would be the capacities post expansion? And my second question is on the PTA, the way prices have come off and the way the duty structure has been changed. What would be the net gain to us, if any? Thank you very much, sir.
I'll answer the last question first on the PTA. I have maintained before in my previous earnings calls as well, that in all our business models, and PTA is relevant in the case of film, it's a pass-through model. So the price reduction or increase is passed through. So that takes care of that. You've asked a lot of questions. Can you...
the capacity utilization, we can give you the breakup. And the film, the capacity utilization is of the installed capacity is almost 100%. In metallized film, we are operating at about 85%. And engineering plastics, we are at about 60%. Specialty polymer utilization as of now is very low. We have built the capacity for much larger volumes.
The capacity actually already existed from before. We converted our batch lines, which were being used to make commodity film grade polymer. We have used the same capacities, depreciated plants to produce the specialty polymer.
And as far as the plant and machinery for each business is concerned, that is something we will give you in the next earning call, because we don't have that much breakup ready.
Perfect, sir. Perfect. Can you give the breakup of the CapEx also for the next few years? What all...
Okay.
Yeah.
So there is only one major capex which has been taken, which has been approved by the board, which is the 110 crore for specialty polymer. No other major capex has been approved.
So, sir, in specialty polymer, you said that you already have a fairly low capacity utilization. So, are you adding just more capacity, or are you adding more capabilities? How exactly are you going ahead with this?
Well, it's a very good question. I'm not adding more capacity because we have enough capacity for melt phase. We are adding a new capability.
Right. Okay. Can you elaborate a bit more about that?
I can't elaborate too much right now, but I can tell you that it is on the lines of sustainability.
Okay. Perfect, sir. I'll go back in the queue, sir. Thank you very much. Good luck.
Thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Good afternoon, sir.
Good afternoon.
Thank you for the opportunity, sir. Am I audible, sir, clearly?
Yes.
Yes, sir. Sir, firstly, in your opening remark, you did mention about the shareholder value creation idea. So, if you could dwell more on the same, sir, in what ways are you going to reward your shareholders, sir?
Okay, shareholder value creation, first of all, starts from the basic fundamental principle of profitability. The more the profit, the higher the reward to the shareholders. So our first objective is to continue to increase the margins in the overall margins of the business, and continue to improve profitability and grow the business. So that is a fundamental thing. Second, as far as the second part of rewarding the shareholders is concerned, comes through dividend payouts, which we have a full intention of rewarding the shareholders handsomely, and we intend to propose to the board a very decent and a handsome dividend payout when we do the final closing of the annual year, which will be towards the end of April or early May. And we will also come out with a dividend distribution policy in that same meeting.
No, sir, absolutely right, sir. These are the things which we investors look forward, and kudos to your team, and that you are on that track in helping building the confidence. Sir, now coming to the capex part, sir, as being outlined that 110 crore capex is in the annual, and it will take around 2 years for the capacity to be on stream. So, sir, what gives you this confidence at this juncture? Because the specialty polymer has just started evolving, sir. After a gestation period of more than 2 to 3 years, it is only 2 quarters now that you are seeing things moving up and the utilization levels also moving up. So, just give the insight that what are the levers on which you are harping this capex on?
ऐसा है कि this is like I answered the gentleman in the first question. We are building a completely new capability. It's not on the same product lines.
Okay.
And this capex is expected to start yielding returns straight away. So it's not that we are going to invest 110 crores and wait for 5 years or 6 years. The ramp up of this will start almost immediately.
Correct, sir. Sir, in the presentation part, sir, in page number 11, the headline gives is expect business momentum to continue in FY21, and the first line which you have used is partners with a global chemical leader in manufacturing innovative polybutylene terephthalate PBT.
Yeah.
And is this a raw material that goes into our engineering plastic? Because in engineering plastic we find the product polybutylene terephthalate PBT being mentioned under the product category. So just wanted the correlation, sir.
No, there is no correlation between the PBT being used in the engineering plastics division and this innovative PBT that we are supplying to this MNC, global MNC. There is no correlation.
What is this all about, sir? What should investors look into this line, sir, partnering with the global chemical?
You see, this is a very innovative PBT. It is a sustainability effort, and it is made from recycled PET. So it has a very high rPET content. And as you know, the world is going towards higher sustainability and environmental consciousness. So people are demanding more and more products made from recycled material, and therefore this product is going towards meeting that demand and that need.
And this will be clubbed in which category, sir?
This is part of specialty polymer business.
Specialty polymer part only. Right, sir. In the value-added film segment, sir, what was the contribution for the quarter and 9 months in turnover terms, sir?
So in terms of volume, we are at about 20%. In terms of the value of the sales from the VAS product, we have done close to 110 crores in the 9 months.
In the 9 months, sir.
Yes, 110 crore sales from value-added products in film segment.
So we did total revenue of 153 crore, which is clubbed under polyester chips and films, and out of that, value-added has contributed to 110.
No, I am saying 110 for 9 months.
Sir. So 9 months we have done 153.
No. 9 months we have done.
Sorry. No, I'm sorry, sir. I'm absolutely sorry. I'm looking at the PBT number, sir. Wrong. I'm wrong, sir. It is 600. Yeah. I'm sorry. And sir, coming to the business environment for the BOPET segment, sir, as your competitors' lines have commercialized the same, and you have told that the impact has been on the lower side. So, what has added to it, sir? Because on the FMCG part, there has been a decline in the consumption pattern. So what has attributed to this absorption of fresh capacity?
Okay, to our understanding, what we understand that yes, FMCG is seeing a decline in their growth rates. But because of this slowdown in the economy and the GDP, there is a conversion from higher price packs to lower price packs. So when, for example, people are now buying less bottles of shampoos and buying more sachets of shampoos.
Correct. Right, sir. Sir, if I come to you, my last one.
I'm so sorry to interrupt, but may I...
Okay, ma'am. Please, yes, ma'am, please send me to the queue. Thank you for the follow-up.
Thank you. Next question is from the line of Priyanka Mohanty from Dolat Capital. Please go ahead.
Hello, sir. My question was on the capex of the film business and the FT business over the next 2 years, and what is the outlook of it? I think more or less I have got the answer. The third question that I wanted to ask was about the engineering plastics business. So what has been done to turn it around, and how do you see it growing further? The performance has not been soft, as you had mentioned. So what's the plan for it?
The performance of the engineering plastics business has been soft because of the slowdown in the economy in the auto and electrical segment. It was directly linked to that.
Yeah.
And in the last 2 months, we have started seeing some improvement in the sector, and our performance has improved in the month of December and in January, and we expect that this momentum will continue. So we hope to start seeing a revival in the prospects of the engineering plastics business going forward as well.
Thank you.
Thank you. Next question is from the line of Dharmendra Dave from Prabhudas Lilladher. Please go ahead.
Congratulations for a great set of numbers, sir, and thank you for the opportunity.
Thank you.
Yeah. Sir, although you just mentioned on the previous participant that you have been looking, the engineering plastic SBU is looking to come out of the pressure. But having said that, if we should look at the segmentally, if the engineering plastic business has been a continuous dragging down the total Ester's performance. So are you planning to any strategic plan like divestment or merger on this SBU particularly?
Well, all I can say on this point is that if there is a good opportunity for divestment, we will certainly have a good look at it, and if a good offer is made, we will view it favorably.
Okay.
And
yeah,
just want to add that if such a thing were to happen, that the EPU business were to be divested, then this would actually make Ester virtually debt-free as well.
Right. Okay. Yeah. And thank you for the information. And coming to specialty polymer business, sir, it has been growing exponentially very well on the both on the volume and value side, also as well as on the margin side. So, what could be the potential for this? Particularly this segment in terms of sales over the what timeline, and also on the margin side.
Yeah. So we did a total sales value of about 32 crores for FY19, and we will do about 70 to 75 crores for FY20. So more than we will double it in this current year over the previous year. This investment that we are making of 110 crores in the specialty polymer business will yield a turnover of about 200 crores additional, which will part of it will start coming because the first part of that expansion will start up in May this year, which is a smaller part, and this will start yielding results, let us say, towards the end of the calendar. So this investment itself will give additional revenue of about 200 crores over the next 2 to 2.5 years, at the run rate of 200 crores per year. And on top of that, all the other products that we are working with, which I mentioned, which were the cationic diable MB06, MB07 easy diable, and there are 2 or 3 other products which I am constrained to talk about in detail. We expect that over 4 to 5 years to reach a turnover of about 400 to 500 crores. It seems absolutely possible.
Okay, sir. And
with margin levels commensurate to what we are doing right now.
Okay, the current kind of a margin are sustainable.
Yeah.
Okay. Yeah. So, sir, if we see the specialty polymer is roughly around 10% of the packaging segment. So over the 4-5 years, how could we see at the top line and EBITDA level? Will it be half?
Right now the film business is doing at about 650 crores a year. Am I right? Is about 650 crores annually. Chips 100 crore extra. And chips 100 crores extra. But if I were to take only film, it's about 650 crores. And this year we're doing 75 crores, so a little more than 10% is the specialty polymer contribution in terms of top line. And if there is no further increase in capacity in film, and this remains same at 650 crores, in the next 5 years we go to 500 crores, then then specialty polymers will become a very significant proportion to overall business of 30 to 40%.
Yeah. So 30 to 40% on a top line front, even EBITDA level, it would be even higher with the higher.
Yes. So right now, let us say if you're doing about 1,000 to 1,100 crores, you add about 400 crores to top line, so we go to about 1,500 crores, to which 500 crores would come from specialty polymer, and 650 crores would come from film. 200 crores would come from
100 crores from chip sale,
and 100 crores from chip sale.
Okay, yeah. And sir, lastly on the specialty, so on the packaging film side, how is the outlook for the first half?
Sorry, can you repeat that question? I didn't understand.
On the packaging film side, what is the outlook, particularly for the fourth quarter and the first half of FY21?
Well, fourth quarter is looking pretty steady. There has been no major upheaval in terms of pricing, even though two lines have started up and now fully operational. So the fourth quarter is looking steady. We hope that this trend will continue for the next financial year as well.
All right. Okay, sir. All the best. Thank you.
Thank you.
Thank you. Next question is from the line of Rajesh Agarwal from Manure Investment. Please go ahead.
Raj bhai, star one dabo. Naam ho gaya.
Mr. Rajesh Agarwal, your line is unmuted. Please go ahead, sir.
Tell me. My line is unmuted.
Yes, sir. Please go ahead with your question.
So my question is.
Sir, I would request you to please use the handset mode while speaking.
Handset, ma'am. Okay. Sir, my question is on the specialty polymer. What has been the turnover in MB03?
MB03, we are doing at about 100 tons per month.
We have done 890 tons in the 9 months period.
Okay.
With sales value of about 36 to 40 crores.
Okay. 36 to 40 crores for the 9 months.
For 9 months, over a volume of 890.
Okay. And this quarter, sir?
In this quarter, we have done 260 tons, December quarter.
And sir, the second question is, now the film business is being peaking, so why we need to do the capex now? Can we wait for the specialty part?
No final decision has yet been taken on the capacity expansion for film.
Okay. It's not been taken. And sir, which are the other companies which make barrier films and silk matte?
Which make what?
The silk matte and the barrier films.
Silk matte,
Hello?
I won't happen to have right now.
Okay. Thank you, sir.
Thank you. Next question is from the line of Kavananda Vaidya from Nirmal Bang. Please go ahead.
Hello.
Hello.
Sir, thank you for taking my question. So I have just one question. Could you help me with the margins in the BOPET film?
We can give you the
value
additions that we have been achieving for the last few quarters.
So in the value addition defined as selling price minus the raw material cost, for June quarter, we are talking of 12 micron plain Corona film, 51 rupees in June 19 quarter, September 19 it was 40 rupees, that it improved to 46 rupees in December, and currently it is in that range only, 45 to 46 rupees.
Okay, sir. And with these two lines being set up and fully functional, sir, do you see any pressure on these margins?
Well, they've already started up. Right now, we seem to be holding on, and we don't see any reason for any major upheaval. There may be some short-term, but I don't see any major upheaval because demand growth has been strong.
Okay. So 46 would be like the average margin that you'll earn on a BOPET film, approximately?
It's very difficult to put a finger on an exact number, but ballpark, yeah.
All right. Okay. That's it from me. Thank you, sir.
Thank you. We take the next question from the line of Ravi Nagda, individual investor. Please go ahead.
Sir, I want to know about the first 9 months free cash flow of the company, sir.
Yeah. So we made a PAT of about 62 crores, and if we add depreciation and the MAT adjustment, etc., there was a free cash flow of about 55 crores generated in the 9 months.
Okay, sir. And sir, what about the product MB06, sir? When we expect a substantial increase in sale in MB06, where it is positioned now, sir?
Well, it is undergoing the final stages of qualification, and we expect to start sales of this product in FY21, in early FY21.
And sir, what it is used in?
It's used for manufacture of fiber, both for carpets as well as for apparel use, and it's a cationic diable master batch. It imparts cationic diability to the yarn.
And it is a patented product, no?
Yes.
Okay, thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor & Company. Before that, I would like to remind participants, if you have a question, please press star, then 1. Over to you.
Yes, sir. Sir, as you told, the cash flow has been 55 crores. So how has been the utilization, sir?
So this all is is parked in the cash credit accounts, and there's a massive reduction in the utilization of our working capital accounts with the banks.
Okay, sir. So now I come to the raw material basket, sir. Mr. Rastogi, if you could give me the breakup, how have been the raw material price trends for both as a mix also and separately for both PTA and MEG?
So the PTA in June quarter was 63 rupees, which is now currently at about 47 rupees. So 63 it reduced to 56, then to 51 in December quarter, and currently it's 47 rupees. MEG in June quarter was 44 rupees, which is now at about 41 rupees. So if you look at the PTA MEG cost per kg of chips, June quarter it was 69 rupees, currently 55 rupees.
There has been a drastic reduction last week in the prices of raw material because of the China coronavirus issue. So there was a sharp reduction last week. We don't know how long this will last. So.
But currently MEG is 41 versus 44. That is what you said.
41-42 range.
This is prevailing now after the blip that came due to coronavirus.
Yes, correct.
Right, sir. Sir, and if we take the peer comparison, sir, in the polymer, in this specialty polymer, who are your peer competitors, sir? If we want to do a comparison, where should we look into?
If you can find me a competitor, I'll be happy to know who they are.
You can only compare our previous quarter with current quarter. That's the only comparison you can do.
There is no, because we have done a lot of innovative work. These products have been developed in-house. So there is really, there is no competition to the products that we are selling.
No, but as your customer who is buying from you must be sourcing it. You are only having a very small quantity and you are in the initial stages. So there must be some other people also who will be supplying to your customer. I was just to, on a global map also, global scale also, where should we look for your competitors?
There is no competition to MB03, for example. It's a patented product.
Okay. Right. And sir, if I come to the employee cost part, sir, we have seen the employee cost rising. How will you explain this, sir, from 10.88 crore to 14.41?
Well,
hello.
One moment. For the quarter. For the
9 months.
For the 9 months, it has gone 3 crores to about 37 crores.
15% increase.
About 15% increase. That's not
9 months
in a 9-month period. 9 month to 9 month comparison.
Yes, sir. Give the reason, sir.
So it is partly because of salary increases and partly because of commission to director.
At what rate are the directors being remunerated, sir? For profit का कितना percent है?
Well, we are allowed up to 10%.
आप ले कितना रहे हैं, sir?
Last year we took 10%.
10%. And this time also provision is for 10%.
No, 10% is the overall remuneration.
Managerial remuneration.
It includes the fixed salary also.
And it is managerial remuneration to executive directors.
No, sir. I just wanted that figure. How much are the promoters and the KMPs getting in terms of their remuneration, sir, in terms of percentage out of the profit? Suppose the profit grows more as it should be, then how are you also going to get benefit of it? So that in percentage terms, I wanted to understand.
So suppose we have in the 9 months, we have on as managerial remuneration payable to the executive directors, a provision of 9 crore is there in the first 9 months. That includes both the executive directors.
9 crore.
Yes.
That is including the salary and
the commission part.
अच्छा sir. Sir, you were looking for some. हाँ sir, क्या बोल रहे हैं?
It is classified as managerial remuneration.
Correct, sir. Sir, you were looking for some selling of some non-core asset also. I think so. Some office and office building and all. Have we moved ahead in it, or is it the sluggish real estate market?
We have not been successful in that. The real estate market, especially in the NCR region, is very bad.
Okay. And sir, what was the last valuation that you did for this? We will take the discount going forward. 35 crore. 30 crore. And sir, you told that even in engineering plastic, you would be interested in putting it on block, sir. So have we got any interested party for it, or we are considering to put it on a block? Where is that? Is it demand driven or supply driven judgment we are going to take?
The question was asked previously, and I answered that if we get an attractive offer, we will certainly look at it favorably.
Right, sir. And that will give you somewhat around 70-75 crore. That is what the figure when you give it, will be debt free immediately. That is what.
No, it should be higher, much higher.
Much higher than that. Right, sir. So, sir, many thanks to you and the investor team also, sir, doing a commendable job in giving the presentation. Only, sir, the background colors being used are somewhat contrary to the background color is not correct. I will speak to the CDR people separately so that we can have a better understanding of the thing. And sir, we would be waiting for the codified dividend distribution policy coming in the coming results. And as per our understanding, these numbers are qualitative numbers and should be on a sustainable basis. We should be delivering these sets of numbers going forward also. My understanding is correct, sir?
Absolutely correct. We are very hopeful that we will continue to deliver performance, and our intention is to reward shareholders. We will come out with a dividend distribution policy at the same time when we finalize our annual accounts at that board meeting itself. And it will be always our intention to reward the shareholders who have been with us for all this while handsomely.
Right. And try to have meetings in the first 20-25 days of the period and not at the fag end. This is also giving you a lower rating. We classify companies which comes at the fag end of the calendar as the ones either they are too big corporate or others those who are not worthy. This is my understanding to have all due respect to everybody. But I think that if you can come up with your numbers, say 25 days after the quarter ends, that would also give a good message that a prepared hand and numbers maybe not coming at the fag end. It's a humble suggestion from my side. Thank you for answering.
Your suggestion is very well taken, and it is always our endeavor to do it as soon as possible. But at the same time, please also appreciate that the government keeps bringing in amendments to the taxation structure, which require us to do a lot of software updates on our SAP, which are very time consuming. So recently 2 or 3 new amendments have come in the taxation effective 1st April. It will be effective 1st April, so we have to complete SAP reconfiguration has to be done. So all this takes time. You will notice that there is a delay in the other companies also because of this reason.
So 1st April e-invoicing would be there.
But however, having said that, it is our endeavor to try to bring you the results by 30th of April.
Thank you. We take the next question from the line of Praveen Yadav, individual investor. Please go ahead.
Hello, thank you. Actually, a few quarters back, you had mentioned that you were going to open a research lab So, any updates on that, sir?
No, no update on that as yet. We have deferred the expenditure on that for the time being.
Okay, sir. Thank you.
But we have R&D capabilities and capacity in our existing plant in Khatima.
Okay, sir. Thank you very much. That's it.
Thank you. We take the next question from the line of Agastya Dave from CO Capital. Please go ahead.
Thank you for the follow-up, sir. I got dropped, so maybe this question was asked. In that case, I apologize. Sir, what about your debt repayment schedule? You have given what was the schedule in the past, but going forward...
presentation.
Yes, but going forward, what is the schedule like?
No, our total repayable debt is only about 77 crores as of now.
72 crores.
72 crores as of now. And I think we will be repayment of about 25 crores in FY21.
FY21 would be 25 crores, and then it will marginally increase to 30 crores in next year, and then 35 crores, and then there's hardly any amount left after that.
Right. And when we do this capex of 110 crores, what would be the debt equity for that? And hence, including the working capital, what would be the peak debt levels that we will see? Gross debt levels, sir.
See, the gross debt as of today is about 170 crores. 170 crores. And in spite of this capacity expansion and this 110 crore, year on year you will see a reduction.
Though we will raise fresh loan, but there would be the money earned which will retain in the business, so there would be lower utilization of working capital limits.
So even when the new capacity is fully operational, we won't cross 200 crores. Is that a good assumption?
Yes, it's a good assumption.
Right. Sir, and one more question.
Our intention is to continue to reduce the debt, not increase it.
Great. No, I just wanted to make sure. Right. I appreciate it, sir. Sir, and one more question. Actually, I may take it offline. I just needed the breakups of the 4 divisions from the previous quarter. I'll take that offline. Thank you very much. Good luck.
I appreciate that. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Over to you all.
Ladies and gentlemen, thank you very much for joining the earnings call for our company for 9 months ended December 2019. And we look forward to seeing and hearing from you in the next call. Thank you.